The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We have the markets this morning, giving back a small portion of the gains we had on Friday. Quite the surge higher in the markets on Friday. We take a look at the volume on Friday. Not as astounding as it could have been on a certain... Let's start it off. Right now, S&P is negative by 17, NASDAQ off by 86. You get some tariff concerns out there. All right. Yeah, look at Wayfair this morning, trading lower. Look at that rip lower, man. Right now, little tariff concerns, trading at $71. So we jump around, but check out the volume. We just kick it off. Let's get right into it, man. Price and volume. We go to a daily. On the S&Ps, folks, that was a remarkable day, okay? You didn't even get the type of volume you had 2 days prior on Wednesday, right? Yes, it's a large volume day. Couldn't even get the volume we had 2 days prior. You jump over the NASDAQ 100. Look at the volume of the NASDAQ 100. NASDAQ 100 did 480,000 contracts on Friday on that huge acceleration. And folks, listen, that was a strong conference from Chairman Powell. Strong statement, Jackson Hole. Didn't expect him to go that strong. He feels that no matter what is going on with the data over the next month, right? He doesn't have to wait for it because that was a strong signal. But look at the volume on the NASDAQ 100. The tech stocks, they've been leading this market higher. We get NVIDIA earnings this week. I was very surprised when I was pulling up the charts, taking a look at them, doing the gold report this weekend, getting ready for market insights. This morning, the volume is just so paltry. Can't believe that on a day like Friday, you couldn't beat Thursday's volume in the NASDAQ 100. The Dow, you do. You surge higher on decent volume. So when you look at the volume of this, folks, right? Dow looks strong. Russell, maybe the strongest. NASDAQ, maybe the weakest on the volume basis. And S&Ps, yeah, we got above Thursday's number, but couldn't even get above Wednesday's number. All right, Bitcoin. How about Bitcoin? Below where we were on Friday. There's a few canaries going on in the coal mine, potentially, folks. And listen, that was a big one, okay? The wind is going to be at this market's back. But yeah, do we have sound in the den, Al? Let's check it out and make sure, okay? Please. Yes, they got him. It's just Duffy. Okay. And the NASDAQ off 88. Let's jump around. So, NVIDIA with their numbers this week. You jump to NVIDIA. Now, check out NVIDIA in the same way. These are huge days for the market on Friday. Surprising you couldn't get a little bit more volume going above where we were on Wednesday, even where we were on Tuesday. Okay? So last week, you have NVIDIA trade lower on Thursday, trade lower on Wednesday. We bounced nicely. Friday's volume couldn't get above Wednesday with volume. And we're into Tuesday's bar, and we don't have the volume. Well, we're going to get some volume this week on their earnings. I was just listening to Bloomberg, getting ready for this program. Excuse me, NVIDIA, 3% of the market cap of the globe. The global market cap, 3%. Quite a company. But yes, tariff concerns. Restoration Hardware, down by $20. Tell you, the deviant part of my brain right now is saying, man, that would be something else if that was the first move is not always the move on Friday. And hey, you know, they say don't fight the Fed for a reason, folks. And the chairman's words were strong. But with that in mind, the 10-year is just back to where we were practically on Wednesday. Okay, huge move on Friday. But you put things in context, really hasn't broken away from an area that we've been building, right? The 10-year's gotten to about 4.2% on a couple occasions. Didn't even get quite there on Friday. You jump over to the dollar. Dollar had quite a move as well. But again, we're not even basically at the lows we were at July. The lows were at July 1st, and you barely touched where we were in August. So if this is really the start of a magnificent campaign, something to keep in mind is the dollar just traded from 110 to 98. Okay? As I've been talking about, there's already, and this is where really gold, you would have liked to see. Pull this down. You know, quite a move in gold. But for those of you in the gold market that have been in there for a while, right? Imagine we were already trading lower. You back things up to where gold was on Thursday. You're chopping around between 33.80 and 33.90. Okay? You had the dollar drop a full point. And folks, we're $8 above where you were on Thursday. Right? And yeah, you had risen to that level. Okay? You back it up to where we were Thursday. You've only gone from 98.27 to 97.91. But it lies in that if the market hadn't known that we were going to get so many cuts, if we hadn't known, there'd be a bigger move. The market's already aware that we're getting some cuts. And yes, there was a move. Okay? But you're still talking about a market right now which surprises me. When I look at September, boy, you know, Chairman Powell, he made his bed. He's going to have to sleep in it, okay? If he didn't want the pressure to be on for that rate cut in September, he shouldn't have come out so strongly. He came out strongly. Right now, the market's only putting it at 85% that he's going to cut in September. The more interesting conversation, I think, goes out to December, when the market's looking at about a 48% chance of 2 cuts and a 35% chance of 3 cuts. Okay? There's almost an 85% chance that the market thinks we're going 2 to 3 cuts right now by December. So keep that in mind as these rates move forward. Because, yes, we got a move on Friday, and yeah, I believe the chairman, he was strong with his words. But the market's waking up a little bit concerned this morning. And yeah, the move on Friday was magnificent. But if you compare it just to where we were on Wednesday and Thursday, there hasn't been a huge gap. That's kind of what had me scratching my head over the weekend. You know, we're at 98, we're at 98.20, we're at 97.91, man. Okay, the 10-year, we're right back to where we were on Wednesday right now. And even markets, right back to where we were on Tuesday right now. So I found myself listening to the chairman on Friday saying, man, these are strong words. I think this is a big speech he's making. I think he's really made a difference here. And then, yeah, we have a market that's traded up on a NASDAQ. NASDAQ 100, folks, you're talking about like a 45% run from the lows. 45% run from the lows. Watch that volume. Okay, if I told you what happened on Friday, and I said, what do you think? You think the NASDAQ 100 volume is going to be higher than Thursday and higher than Wednesday or lower? Right? It was a lower number. We're coming back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now. Negative by 16, NASDAQ negative by 84. And yeah, we jump around. So Intel, higher again in the pre-market. You're up by about another 2%. You're at 25.37. And the Journal's got an interesting opinion piece over here. A new tax on patents is as they call it. But it's talking about the 10% ownership, okay, of Intel. And they're giving Trump a little bit of the business here, okay? And yeah, I talked about it when he came out. I mean, he basically said that because the CEO was, born in a different country, that he had conflicts over who he had allegiances to, whether it was America or China or Singapore or whoever. The CEO makes a trip to the White House, gives the White House and the country 10% of Intel, and all is good. Now, the administration says the deal won't include a seat on the board or governance or information rights, mostly vote its shares with Intel's board. But living in reality for a moment, to think that this administration and this president, if you agree with him or not, is somehow not going to care what that happens in that company, that somehow governance is not going to be at play. Governance was already at play. He wanted the CEO out before the country owned 10%. You think it's not going to matter? And then they go into, that whether it's Republicans, Democrats, okay? Biden and the Democrats get accused of socialism. And I find myself wondering, okay, because, listen, this is happening because it's under the guise of well, this company is so important, we have to be competitive in the chip sector. Okay, reasonable argument to make, man. Let's have the argument. Let's have the debate. It's not even an argument. It's a good debate to have. We need chips. That's the future of defense, right? So I get it. Can't you make the same argument with, well, why wouldn't you, if you're worried about, think about the amount of money that we put out for food stamps or SNAP, whatever you call it, right? Maybe the U.S. government should take a 10% stake in the biggest grocery chain in the country to make sure that we're making sure that those groceries aren't being, you can make that case in almost any company, on almost any sector, that somehow it's in the betterment that the government controls a portion of it to make sure it's being controlled for the best interest of the country going forward. It's a wild one. We'll see where it goes. And I love the debate in terms of how that's a different debate and how people on either side of the aisle would be a proponent or against it with the people you like and you don't like in office, because that's the key. And I'd be hard-pressed to think that the people who are proponents of President Trump and his administration would feel the same about the administration and the president's rights to demand 10% ownership stakes of private companies in what is essentially a shakedown. Please tell me why it's not a shakedown if it's not. Okay, you come out, you slam the CEO everywhere, right? And then you demand 10% of the company, and then he's the greatest guy that's going to take the company future. It's like the literal textbook definition of a shakedown. And so where does that lead the future in terms of those? And I would be hard-pressed to see how anybody would want all presidents having that right, and that's the key of it. And yeah, the defense part of thing, the chips part of thing, okay, it's a reasonable case. But you could make that same case with almost anyone, all right? You could have made it with the car companies. You can make it with almost any company. You could make the case that somehow, if you think that the person running the White House is the best person in the world, that it would be good that the government bought a 10% stake in it. Anyway, it's a wild world we live in, folks. And we got a 10% stake. And if you believe there's no governance rights, well, remember what happened 5 days before the U.S. had a 10% stake in that company, that the President of the United States publicly was accusing the CEO of being conflicted, and read through the lines of context. And so, yeah, there's going to be a huge pressure, and you better believe that it's going to come with doing what the government thinks that you should do. And it's quite a line to cross, right? Everyone always says, where's the line, right? It's a gray area. Where's the line? Where's the line? This is a pretty easy line, folks, okay? It's a little shakedown of a 10% ownership in the company. And yeah. All right. We jump over to Walmart shares. Now, Walmart had been the benefactor of some of this risk. When the market went risk on Friday, you actually saw some of these safe havens pulling back. You had Walmart trading lower, and we're just about flat this morning. And you can see as the market's lower, now you got Walmart slightly in the green. Target shares, retail and focus last week. Target right now trading about flat. We jump over to TJX. Trading at 136. We check in on Mickey D's. Trading at 314 right now. And yeah, it's great questions, Frank, in terms of the bullish, the bearish, a little bit of slow volume on the retrace. What I'm trying to wrap my brain around most is how the market couldn't even get it going on Friday with volume, right? And yeah, at some point, this market's going to lead a little retracement, folks, okay? You get parabolic, and, no matter what time frame you go on right now, which is the worrisome part, I've talked about, we haven't had a real pullback in this market since 2008, folks, and I'm not calling for a pullback like that, but it's something to consider that this market has not had the shock of a detriment to your wallet outside of COVID. Hasn't happened, right? I always talk about the 2022 when the Fed started really hiking. Well, yeah, we all felt the pain, and I think we all had hindsight that, man, if we had just gotten out at the highs of 4,800, right? You pull back to 3,500. But you got to remember, folks, that there was a time in 2020 where we would have killed just to get break even at 3,300. And that was not even your max pain area. So within 2 years, right, your pullback did not even reach the area that you were begging to get back to. So it wasn't really that bad, because you found yourself saying, well, yeah, the market pulled back, but we're still like, higher than where we came into COVID, and everybody freaked out. So things are going well. There was and then COVID was like a 60-day reprieve, right? Outside of that, we're talking about, so yeah, there's got to be pullbacks, no matter what time frame you're talking about. On a monthly, you take a look at the weekly, yeah, heck of a pullback. But boy, as I talked about, NASDAQ 100, folks, you just went from 16.4 to 24,000, almost a 50% acceleration. We'll talk a little bit of bulls, we'll talk some bears when we get back. Stay tuned, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You got equities open and the market slightly in the red. Going to be an important day to see if we get some follow through. Sometimes that next day is always the one that gets you on an important day, like a pivot day like the Fed. And we got some decent action on Friday. But as I've said, the volume a little bit light compared to what you look for, especially with the type of price action you got. NASDAQ 100 on Friday. the lowest volume day of the prior 4 days, right? That was a huge day. You couldn't even compete with those days that you were getting on the NASDAQ. We take a look at the weeklies, okay? And yeah, we had some decent volume on that bounce that we had last week, okay? But not even as big as where you were a couple weeks ago, coming into the end of August. End of July, beginning of August. Same thing on the S&Ps. Couldn't get more volume than July 28th. It should have been a rip-roaring week, folks. And then you look at the Dow. You did break above that area, but not as much volume as that week as well. All right, we're checking on NVIDIA. Down about 0.25%. Let's check in on some of the Magnificent Seven. Amazon shares, quite a trade on Friday. You're down by 0.4% right now. Apple off by 0.5% right now. Google shares slightly in the red by 0.1%. Meta slightly in the green by 0.1%. Tesla shares down by about 0.6%. We check in on some of the high flyers, particularly volatile. Robinhood off by 1.2. Palantir off by 3.5 right now. Excuse me. And yeah, this one from the Journal, we'll see if it plays out. I wouldn't necessarily agree with their headline, which is the tech rally shows signs of losing steam. And it's talking about how the interest rates, right? We've been talking about the home builders. Okay, you take a look at the home builders. They've been on fire recently. Lennar, quite a day on Friday. You're down by, 0.4% right now. D.R. Horton, down by 0.7. You charged higher on Friday as well. But there has been a rotation, right? Away from some of those tech leaders into some of those companies. We saw with Walmart, part of the beneficiary as well. The Dow accelerating to a certain degree as you have some laggards. Sector performance, don't get caught up in this 1 week, folks. All right, look at the year to date. Now, yeah, there was a pullback. There was a difference there, okay? They're calling it a vibe shift, and the chairman's statements were strong. But part of me thinks that we got like one more quick reverberation. Like maybe we get a September cut, and then maybe the market says, hey, we're not getting 2 to 3, though. The market's got 2 to 3 cuts priced this year. Okay? You have equities like Lennar that are up 35% from those, really from June. Okay? D.R. Horton's even a bigger number. D.R. Horton just traded from June 16th at $120 to $170, right? Was that 40% acceleration over the period of about 2 months? Well, the writing's not that clear yet, folks. Okay, you get this big volume day from their earnings about a month ago on D.R. Horton. That would bring you back to about the 140 area, the highs from July 7th. And Lennar, yeah, you break above it last week. You don't have the volume, though. Maybe you come back and test that 120 one more time. A part of me is believing, hey, the market wakes up this morning, maybe we're not quite there just yet. There has been the shift, okay, to some of those companies. Yeah, D.R. Horton. But I wouldn't get too in the camp, folks, that somehow those companies are now going to be the vogue versus the tech companies. Tech companies have been driving this market higher, and they're going to be where what drives this market higher or lower as we go forward. All right. Let's see what else we got pulled up here this morning. And how about this one? Keurig Dr. Pepper. They're getting more into the coffee business for $18 billion. JDE Peet's, 15.7 billion euros. Man. Yeah, so that's going to bolster their struggling coffee business. Now, you know what's remarkable, folks? I'm going back 20 years ago, okay? And TFNN was one of the first people that the Keurig, okay, was advertising with. If you were back 20 years ago, folks, we had them. We had Keurigs. We were handing them out. I'll have to see if I can find some of the promos. We were doing promos and we were handing them out. And I remember my dad talking about how they were telling him, the people from Keurig were telling him that this is going to change the world, okay? This is, you know, it's instant single cup coffee brewers. And they were sure right. Now, that was ages ago, okay? But yeah, they've been on quite a run. You got Keurig Dr. Pepper. They took them over in 2018. But look at the coffee business. $4.1 billion in 2021. $4 billion estimated in 2026. Yeah, they got some problems there. So, more than 50 coffee and tea brands around the world. Peet's, Jacobs. So it's going to create a stronger global number 2 in coffee behind Nestle. Nothing like coffee, man. Hey, it's the biggest drug in the world, caffeine. Probably only second to alcohol, if at all. And I think coffee is probably number 1. So Nestle's coffee-related revenue, which is Nespresso, Nescafe, about $28.7 billion last year. And there's your Keurig Dr. Pepper. Down 7.6%. We take a look at the monthly. Look at this thing. Well, that's what happens when you got no growth, man, right? Especially in their coffee business. Look at the low volatility on this equity, man. Let's take a look at the volume. All right, on a monthly basis, some nice volume on February. Let's put it on a weekly. Look how you just drift higher on no volume, right? That's not how you want to do that. All right, now we're coming into these highs. You drift higher, you touch 36, boom, you wake up at 32. Keurig Dr. Pepper getting more into the coffee business. Market's pushing higher. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We talk a little bit of Netflix. So this one's interesting. K-pop Demon Hunters. Haven't seen it. Tried to give it a watch, and I may have to try again because it's a little bit of a cultural phenomenon. But it's been number one on Netflix for a while now. I keep seeing it up there, and they just released it in the box office, and it's number one. So, like, the world is changing so fast, man. When you think about it. So now, check this out, right? Now, it was always you go to movie theaters, and then you go to streaming. Netflix is like, hey, we got a huge streaming hit. Let's release it into movie theaters now. And they take in almost $20 million. 16 to 18 million. Those numbers are not exact. That film was in 1,750 theaters, but AMC did not carry it. Okay? They're trying to buck the trend here, I guess. The largest theater chain in North America declined to show the movie. But that didn't stop Netflix from claiming the top box office title this weekend. It may turn out to be higher. And yeah, the theatrical release, out of the ordinary. The movie debuted on the platform in late June. So look at that. It's been out for 2 months. And then they put it in as sort of a... Yeah. Pretty remarkable. That's how you do it. And that's their first box office win. First time. And they do it with a movie that's been crushing for 2 months on their platform. You talk about making the most, man. Okay. Let's see what else we got going on. Yeah, we talked there. We talked to Kurg. All right, let's see what other equities we got moving this morning. American Eagle. You're down about 3%. This thing's been on a tear. Sydney Sweeney and her campaign and the political firestorm. No such thing as bad headlines, right, for American Eagle on that run up to a certain degree. But yeah, they got a downgrade after Bank of America said that while that ad campaign may boost sales, momentum will be sapped by tariffs. You get back Friday's gains right now. Take a look at the weekly on this thing. All right, maybe we come back, test the bottom of that acceleration on some volume here. We got some big volume, though. You would have liked to see a little bit more volume on August 11th. But that's how you break out of a low, man. check out NIO. Yeah, so they announced their new SUV on Thursday. It's some volatility as well overnight. We're still positive by 1.3% right now. Yeah. And how about, so, check out this article, right? You're talking about an SUV at $43,000 under a battery subscription plan. Battery subscription plan, folks. And yeah, they were dramatically higher. ES8 SUV. That competition in the EV sector. On fire. And yeah, so this was the news that hit on Friday, which you saw all these companies kind of, when you're talking about Wayfair, you're talking about Restoration Hardware. Okay, furniture stocks. We'll jump over to Williams-Sonoma in a moment. Trump says furniture tariffs are coming later this year. Furniture, Wayfair, Restoration, Williams-Sonoma, yeah, they're all down dramatically. So William caught a bid on the open. You're still down by about 3%. You talk about a run, man. These companies, so prone to tariffs. Restoration Hardware, yeah. Remember this one dropping out of bed on those tariffs, man? You went from 250 to 150 overnight. Look what we did. We filled the gap, and then we're trading lower, down by 7.7%. They are particularly vulnerable. Ethan Allen off by 4.6%. Quite the acceleration for them on Friday, though. And this one will be interesting to see how it plays out. Because are we making furniture in America? I don't know, man. Seems like one of those areas that's really ripe for tariffs in terms of the prices that they're able to put these together overseas. Just one of those risks looming out there. All right, we check in on yields. We check in on the dollar. Take a look at metals. You got the 10-year right now. Yeah, kind of recoiling from where we were on Friday. Let's jump into a 5-minute chart. So we're at 4.29 right now, folks. Today's going to be an important day. We got yields rising. We got the market pulling back. No dollar strength just yet, though. Yeah, we're well off the lows, but we got a 97 handle dollar under pressure. So, speaking of cars, well, at $43,000, you don't need a 7-year loan, but, and I say that as in that new SUV that NIO just pushed out, but yeah, 7-year car loans. So, more than 1 in 5 new vehicle financing in the second quarter, 7-year car loan. Yeah, you better believe it. Slower equity building, upside down, that's the biggest worry, right? The average interest, almost 15 grand. Some lenders say if 7 years is a problem, why don't you go to 8 years? Yeah. That's less than 1% of auto loans, but guess what? Why not, if they're going to give it to you? Now, at some point, that debt will matter. As in, 8 years, 9 years. I mean, at some point, you're going to be upside down on that car, potentially. Yeah, we'll finish this up. We'll take a look at some of the car companies. But debt, consumer debt, a problem. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Talking about those car loans one more time. So 6 years is the vogue number here. That is in pink, okay? It's been a number that's chopped around between about 35 and 40% of all car loans are 6-year loans. What's remarkable here is you go back to 2005, even if you go back to like 2010, 2011, 5-year loans, which were in black, was the largest portion. 5-year loans were almost 41% of auto loans in 2011. At that time, 7 years were 2%. Folks, within 14 years, you've gone from where 5 years were 40% of the market and 7 years were 2%. 7 years are now a bigger number, and the trend is not going to stop, right? 5-year loans, 18.5% of auto loans. 7-year auto loans, 21.6%. And yeah, the big problem there is you're underwater. This is not like a house, because when you buy a house, it doesn't lose 20% of its value the moment you drive off the lot, right? You buy a new car and you got a 7-year mortgage. It's a mortgage. It's not an auto loan. The first couple years, you're barely paying off equity, just like in a house. All right, it's the back end where you're paying off a tremendous amount of equity and less interest. In the early years, you're paying off a ton of interest. And then when you go to a 5 to a 7-year, okay, check this out. A 7-year loan, $15,400 in interest. Okay, a 5-year loan is almost $5,000 less. So a 5-year loan, you're paying about $10,000. And a 7-year loan, you're paying $15,000. Why is that? Because the early years are all interest. So be careful on those auto loans, but not exactly a good thing. Upside down auto loans, right? 7 years? I mean, what's the average auto loan look like 3 years into that? And people's lives change in 3 years, folks. You're still dealing with a payment that's $800 or something like that for a 3-year-old vehicle, and you're upside down. A little bit worrisome. Market, not bad. S&P's down by 12. Folks, stay tuned. Basil Chapman, he's coming up next. Have a great Monday, everybody. We'll see you this afternoon. Thanks, folks.